Hello, and welcome to another update video about Bitcoin. Bitcoin, we take a look at the daily time frame and we take a look at the chart from an Elliott Wave perspective, which is a sentiment-based analysis method that gives us roadmaps and gives us a good idea of where scenarios change and shift and everything. Now, at the moment, the situation on the daily chart is completely unchanged. The price has been moving in a sideways range for many weeks. And if you watched previous videos, then you'll know that one of my original comments was when we entered the range, I think it was even in December, that I said it could very well be that we spent some days above 100,000, a few days below 100,000, and it might be there for a while, you know, the Bitcoin chart. I'm still watching for higher prices, would still like to see the price rally once more and reach the 130K area, which is up here, and it's the 61.8 extension and an ideal target for this larger rally, which started in August. But this rally from August is only part of an even larger rally that started in 2022. So the main takeaway is we are most likely very late, in the very late stages of a larger rally, and we could see that one more high that's currently expected. What I cannot rule out, even though it's not expected at this stage, but what I cannot rule out is another test of this support area between $69,000 and $91,000. And that would be another test of the support area in a wider wave 4. So if the price cannot break out from here, then I have to assume that this wave 4 is still unfolding. I mean, maybe something more bearish is already playing out. Maybe the long-term top is already in. The main takeaway is that we're very close to a long-term top. It's not expected, it's formed yet, and also there is no evidence for it. There's just sideways consolidation, but people get very nervous about the smallest movements. I mean, we are still very close to all-time high, and we haven't got any impulsive decline. So it's just something to be aware of, but it is not going to be an easy ride higher. It's going to be a bumpy ride. We are, in my opinion, in the late stages of the rally. Now let's take a look at the smaller time frame here. There isn't really too much new stuff to talk about compared to the last video. There are two bullish scenarios I'm tracking. They are both based on the idea that a larger degree wave 4 bottomed on the 13th of January. And in the yellow scenario, which is the bullish one but short-term bearish, we might test lower support again. Now, this is still all based on the idea that on the 13th of January, a larger degree wave 4 bottomed. You see it here on the daily chart. This is the idea. Alternatively, the wave 4 is still unfolding. But again, that is not expected, at least not until we get a break below critical micro support. At the moment, as long as the market is holding above 92,665, the overall focus is on higher prices in this idea, in this scenario, that wave 4 already bottomed. In the short term, the yellow scenario would require a break below the intraday low, here at around 101,400, which might very well happen, and the price could test the area here around 99,235 and 97,269 next, maybe even a little lower, 95,340. I would mentally prepare for that. I did say that already yesterday. I would mentally prepare for that just because how sharp this decline was and just because how ugly the move to the upside looks like. Yeah, this was quite a sharp decline in blue, in the blue scenario. Blue is the more bullish scenario. So we've talked about yellow. Yeah, and the yellow scenario is something we have to consider, but the main takeaway is if the market tests the lower support region, we would only re-enter the support area from which this rally on the 27th of January started. So we are basically just falling back into the larger range. Now, the more aggressively bullish scenario shown in blue is the scenario that I would actually like to see play out. However, it has reduced in likelihood. And it might break over the weekend. I mean, when you watch the video, maybe it's already broken. The market is incredibly weak. The S&P 500 and the Nasdaq certainly dragged Bitcoin down yesterday a little bit, and they had an effect. These markets are correlating at the moment. Doesn't mean that the S&P 500 caused the sell-off on the Bitcoin chart, but they're simply moving together right now. And all I'm saying is the stock market is doing the same thing, right? So the markets seem to be moving together. Now, what we see is a very, very deep wave 4 in the blue scenario. So we have a support area. It's labeled diagonal support. That's a support area for a diagonal structure. The blue scenario is a diagonal pattern and ideally would rally higher in another move up in a fifth wave. But that fifth wave would need to be very extended. This fourth wave is very, very deep, making the blue scenario less likely. So as I said, when you watch the video, maybe it's broken already. The micro count isn't so important. What is more important is to understand that as long as we're holding 92,665, the idea is that a larger degree fifth wave is already unfolding. The fourth wave bottomed on the 13th of January, and we haven't got, and that's so important, we don't have a 5-wave move up from the January low, from the 27th of January low, and that's why we don't have a confirmation that a low is in. This structure remains very, very fragile. But with this information here, you should have all the levels that you need. So I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.